Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for all you fellow CommunityFT members. And before we launch in and have an interesting discussion, let us take a quick risk warning. So if we can all familiarise ourselves with the information in front, engage as much as is possible so that hereafter any decisions we make in our trading are of a fully informed nature. In front of us this morning, guys, are on the cards for us. Let's take a look at some economies, the well-being and performance of those economies represented by their currency. Let's also take a look then at an energy. So in front of us, everyone, this is the daily chart of Euro US dollar. And if I just remove these lines here I had prepared earlier and replace them then, explaining to you all why I'm doing this. And I guess the basis of this is some simple classical technical analysis techniques. But we want to really look at what this gives us an insight into. So if everybody notices what I've just effectively drawn in, can we all see what's coming to light here? What's happening really is that the high prices are moving downward with a particular gradient and the low prices are moving upward with a particular gradient. Now that gives us what we call in technical analysis, let me zoom out a little, a bottleneck formation, and it really establishes for us key areas of moving or increasing support and key areas of falling resistance. This is of interest if you think about it, because at this particular level here, at the apex of the bottleneck, possible opportunities are ready. And we say that the possible opportunities we could look for are in this particular area here, such that if the price breaches this level, we could look for possible short positions, or if it breaches this level at the apex, possible long positions. But that in itself wouldn't be enough for confirmation. So what could help us with that decision, of course, is the stochastic oscillator. Such that the stochastic oscillator, if it's indeed overbought or oversold when this particular bottleneck occurs, we could be looking then at that for further confirmation, helping us with that decision. Okay, let's move on then to crude oil. That's the weekly chart, but let me switch to daily. So what we're noticing here, of course, is that the recent support established around the 41 mark seems to be approached again by the price of crude oil. Now, in terms of looking for opportunities in this market, what's been very useful is the 55-day exponential moving average coupled with the commodity channel index to a 55-day period also. And what's interesting here, if we look a little closely, is that any time the commodity channel index shows the price outside of its regular range, that also sometimes happens in parallel or simultaneously with the price crossing the 55-day exponential moving average. And when that happens, we get a signal for a breakout. And it's been remarkably accurate over the last given period of time in this market. So possible long opportunities here indeed were caught, possible short opportunities here also. But furthermore, doesn't this give us an insight, a relatively accurate insight, into how we can look for possible opportunities hereafter? So we might say that when the commodity channel index breaks back into its range, that could be a sign that the breakout is over here. It might also be the sign that the market's starting to reverse, and once it hits the 55-day exponential moving average, depending on where the commodity channel index is, we could look for possible long opportunities or an exit, assuming we had been in here. So we hope this has been of help. If you have any further questions, do not hesitate to get in touch. We welcome all inquiries. Have a terrific day, keep learning, and we'll speak soon.